Welcome to the Travelex Outlook for the week of June 21st. The U.S. dollar starts the week off on mixed footing. The dollar actually rebounded from an earlier one-month low against the euro, though the dollar is still down against its commodity-based rivals in Australia and Canada. The dollar's weakness against those currencies has really been a direct correlation to China's news over the weekend that it would finally allow its currency to appreciate some against the U.S. dollar. In fact, the strong yuan of late has been a key source of tension between Washington and Beijing, as that makes Chinese goods cheaper in the U.S. That has also contributed to the U.S.'s trade deficit. The yuan currency has really been pegged to the U.S. dollar since about mid-2008. That's as Chinese officials took that approach to help stabilize its economy from the global financial crisis. China's economy, now that it's on better footing, that suggests that we could see increased demand for key resources by the Chinese economy, which is one of the world's top consumers of natural resources. And so that has boosted risk-taking, and that has boosted the Canadian and Aussie dollars, which are at about 5-week highs against its U.S. counterpart. Last week, the U.S. dollar gave back some of its impressive gains that we saw earlier in June against the euro. In fact, the euro last week turned in its best weekly performance against the dollar since May 2009. And that was helped in part by a positive Spanish government debt auction and the more encouraging performance or the increased demand for Spanish government debt. That helped to allay some fears of a broadening debt crisis in Europe, so that helped to underpin the single currency. This week, the main event will be the Fed's two-day meeting, which gets underway on Tuesday. The U.S. Central Bank, it's going to be more of a situation of not really what they do, but rather what they say. The U.S. Central Bank on Wednesday afternoon, about 2:15 Eastern Time, is expected to leave U.S. interest rates steady near zero. However, investors will really tune into the Fed's statement for clues on the outlook, not only for the U.S. economy, but on the interest rate outlook. If the Fed adopts a tone that really suggests that U.S. interest rates could rise later on this year, that would be viewed as dollar positive. Also this week, we get data on the U.S. housing market, retail sales, and consumer sentiment. The focus later on this week and into the weekend will be the G7 meeting that gets underway in Toronto. That is it for this week. Please tune in to us online for breaking foreign exchange news.